17,000 crore rupees deal. Sunil Mittal's boldest bet. India's strategic entry into China's hair. An Indian telecom titan who has dominated the mobile network space for decades is now taking a step in a direction that could completely redefine his identity. This time, it's not about towers or internet speeds. The story now revolves around refrigerators, washing machines, and air conditioners. And at the center of this story is Sunil Mittal, the name that sparked the mobile revolution in India. But now, he's preparing for a massive 17,000 crore rupees deal that is not just business, it could be a strategic move to challenge China's dominance in a whole new way. Today, we are diving deep into this breaking development. But before we begin, if you are new to our channel, don't forget to subscribe so you never miss a single update from us. Let's begin today's discussion without any delay. This news was first reported in a special Bloomberg report, which revealed that Sunil Mittal is in talks to acquire nearly 49% stake in the Indian unit of 𝐼𝐸, one of China's largest home appliance manufacturers that has been rapidly expanding in India. The deal is estimated to be worth $2 billion, or around 17,000 crore rupees. But the bigger question is, why is Mittal, the architect of India's telecom revolution through Airtel, now showing interest in refrigerators and washing machines? The answer lies in the booming consumer durables market in India. Products like refrigerators, TVs, air conditioners, and microwaves are witnessing rapid double-digit growth each year. As electricity and internet access spread across rural India, demand for modern appliances is also increasing. According to estimates, this market could be worth several lakh crore rupees over the next 5 years. Mittal, a seasoned businessman, clearly understands that the future lies not just in digital connectivity, but also in smart, connected homes. And Mittal isn't going into this deal alone. Reports suggest that he plans to execute the deal through his private investment arm, with support from private equity firm Warburg Pincus. However, the deal hasn't been finalized yet. Talks are ongoing, paperwork is circulating, and regulatory approvals are awaited. If all goes well, an official announcement could be made in the next few weeks. Now let's talk about the uncertainty surrounding this deal. 𝐼𝐸 is still evaluating how much stake it actually wants to sell in its Indian operations. According to several reports, the company is considering selling anywhere between 25% to 49% stake. In fact, before Sunil Mittal entered the picture, 𝐼𝐸 had also held discussions with Singapore's GIC, Temasek Holdings, and Abu Dhabi's Mubadala Investment Company. However, with Mittal now in the race, the buzz around this deal has intensified even further. 𝐼𝐸's business in India and South Asia is growing at a rapid pace. According to the company's recent financial filings, its revenue jumped by over 30% in the first quarter of 2025. Notably, 𝐼𝐸's side-by-side refrigerator holds a dominant 21% market share in that segment in India, showing the company's deep understanding of Indian consumer behavior. If an investor like Mittal comes on board, it could completely shift the game in 𝐼𝐸's favor. What makes this even more interesting is that Mittal is not making this move through Bharti Airtel or his telecom ventures, but rather as a private investor. This suggests he is diversifying his investment portfolio beyond telecom and into technology and consumer goods. In fact, Mittal has previously invested in various sectors, be it payment banks or satellite internet services. And if this deal goes through, it could be a major turning point not just for Mittal's portfolio, but also for 𝐼𝐸 India's future growth trajectory. According to the Bloomberg Billionaires Index, Sunil Mittal and his family currently hold a net worth of around $28 billion. When someone with such wealth and experience shows interest in acquiring a 49% stake in a company, it's not just about the money, it's a signal of a larger strategic vision for the future. There's growing speculation that in the coming years, 𝐼 and Mittal could together usher in a smart home appliances revolution in India. Many experts believe that Mittal's move could redefine India's manufacturing landscape. Under government initiatives like Make in India and the PLI, Production Linked Incentive scheme, if 𝐼 starts manufacturing its products entirely in India, it would not only create jobs but also help India emerge as a global hub for technology exports. And with a seasoned entrepreneur like Sunil Mittal leading this charge, there's even more confidence in its success. From cities to small towns and even villages, India is rapidly adopting a smarter lifestyle. A refrigerator that was once considered a luxury has now become a necessity. Washing machines that were once found only in urban homes are now a staple in semi-urban households too. This rising trend in consumer behavior is precisely what has drawn Mittal's attention toward this sector. Now let's take a look at 𝐼's presence in India so far. The company entered the Indian market in 2004 and over time carved out its space among giants like LG, Whirlpool and Samsung. Today, 𝐼 products are available in over 30,000 retail outlets, and its manufacturing unit is located in Greater Noida. If, following this investment, Mittal introduces new technology, distribution models, and digital strategies into 𝐼 India, this partnership could serve as a benchmark for many other companies. So far, we've looked only at the economic aspects. But is such a massive investment by an Indian businessman in a Chinese company really just about business? Or does it carry a strategic undercurrent? Today, as India pushes for self-reliance, reducing dependence on China has become a central theme across discussions. In such a context, if an Indian entrepreneur invests in a Chinese company and infuses it with Indian identity and operations, couldn't that be seen as a form of economic counter-strike? This deal could also spark political and diplomatic reactions. Over the past few years, there have been several tense moments between India and China, yet dialogue continues on the trade and investment fronts. If an industrialist like Sunil Mittal places a major bet on a Chinese company like 𝐼, it could mark a new chapter in economic relations between the two countries, where cooperation might still be possible even amid geopolitical friction. And finally, let's talk about the major opportunity that could emerge if this deal succeeds: global exports of 𝐼 products from India. If Mittal encourages 𝐼 to scale up production in India and turn the country into its global manufacturing base, it could be a significant economic boost for India. Not only would this create jobs, attract technology, and expand trade, but it would also help position India globally as a trusted and capable manufacturing hub.
If this video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources: news from various news agencies, opinion polls and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.